All good. Welcome to the 2022 Wellard Annual General Meeting. This is our first hybrid meeting. We're joining you here from the Fremantle offices, and then there's everyone else who's online. Just a brief. Whose phone's that one?
Oh, that might be yours, Mr. McNaughton. Yes, Mr. McNeilage.
Yeah, we just got someone's phone going on. Okay. Thanks for that. Yeah. Just for those here present here in Fremantle, just the safety information. The evacuation stairs are just out the doors here near the lifts in the case of emergency. Today, the agenda, broadly, I'll just give you a brief overview of what we'll be talking about, how the structure of the meeting will run. I'll introduce the team and a short formal welcome on the formalities of how the procedures will be laid out. I'll have an executive chairman's address focused mainly on the operations, the year that was, and the outlook going forward. Paolo Triglia, our CFO, will deliver the financial review of the business, following which we'll then have questions and answers. Those that have been submitted previously from questions online, and also anyone who is on the meeting can raise questions as we go. We'll then move into, Michael will take us through the formal AGM part of the business. There's only 3 resolutions today, so it's a fairly short meeting. And then if there's any further questions or answers, etc., then we'll close the meeting. So the introductions today, here in the Fremantle office is myself, the Executive Chairman, John Klebeck. In Singapore, we have Mr. Philip Classius. In Queensland, Mr. John Stevenson, and joining us from China is Mr. Kandaloo. From the management of the company, we have to my left here, Michael Silbert, who's the General Counsel and Company Secretary. And in Singapore, along with Philip Classius, we have Mr. Paolo Triglia, who's our CFO of the business. Here in Fremantle office, we also have our auditors represented by Mr. Neil Pace, his team. And online, I think we have the Singapore auditors joining as well. We don't have share registry link here today. Michael is covering that off. And from FTI, I'm pointing over here, but no one can see me pointing. Those here in the room can. We have Cam Morse and Steve Zaleski. So this is our first hybrid AGM. We decided last meeting we will continue to do this going forward. We think it's important that shareholders have the opportunity to be present if they so wish at the meeting, and those who cannot join us here in Fremantle can join us online. Please listen to all the different ways that you can vote if you're a shareholder participating in this meeting, in terms of which the shareholders participating online who have been verified to vote during the meeting will receive a polling form at the start of the meeting via email for each of their holdings. While we proceed with the meeting, please check your email to ensure that you received your polling form. You'll receive a polling form for each of your shareholdings, so if you have more than one shareholding, you'll receive more than one form. Completed forms can be submitted at any time prior to the conclusion of the meeting, but once submitted, they cannot be changed. Shareholders participating in person, excuse me, apologise for my voice. I'm just recovering from COVID, and the outcome of that is a very scratchy voice box. So if I go a bit mute, I'll try to be louder. Anyway, shareholders participating in person will receive polling forms and will vote during the meeting. Questions, as I mentioned, questions will be able to ask by typing them into the webcast portal or clicking on the raise a hand icon to ask a verbal question. In-person shareholders are able to ask questions when prompted by the meeting's chairman, myself, and they will occur after the presentation by Paolo Triglia. Questions relating to specific resolutions will be addressed when Michael goes through those 3 resolutions at the later half of the meeting. General questions will be addressed at the end of the management presentations, and questions about the resolutions can be asked during the formal part of the AGM. You will be asked to identify yourself prior to any questions being raised. Now over to my presentation. I'm going to click on the first page there. Next one. So FY22, the overarching theme for Wellard in FY22 is we have a resilient business that has a platform as we look to replace the ships as they age into the future, and the market at the timing in which we would like to see that the new shipments come on board with the volumes returning to our base businesses. In terms of the financial side of it, Paolo will go through the details, but the P&L was aided by the successful arbitration to recover the refund guarantees relating to the MV Ocean Kelpie, which didn't complete in the Uljanik shipyard in Croatia. That was successfully, the proceedings were successfully found in our favour, and we were recipient of the refund guarantees there. The underlying market overall for 2022, it's fair to say is mixed, because we can't ignore the strong breeder market into Northern Asia continues, and that has underpinned our operations entirely. But this has offset an abnormally low Australian exports to both Indonesia and Vietnam, which has no signs of being improving in the very short term. And I'll go through further detail of the severity of those downturns in both those markets, and also the other major market, which is the imports of cattle into Turkey, has also been very poor as well. So we have a business that has weathered extraordinarily low volumes out of the traditional core markets, being offset by good solid volumes of breeder cattle into China, which has continued for the last 3 years and is expected to continue going forward. Added to this, the underlying very extremely high, everyone would see the oil prices. Oil prices directly correlate through to bunker prices, which is our major variable costs in our ships. And everyone would have seen when the price went to 120, our bunker prices went over $1,000 a tonne. So the variability there is you're going from lows of $600-700 up to $1,100 a tonne. So added to the constrained commercial scenario, we've had extraordinarily high bunker prices, and of which we cannot pass all that on to the customers. When the customers are being squeezed, as it is with very high beef prices, some of the pain of the extraordinary high bunker prices have had to be borne by Wellard in the year that has just gone. Performance-wise, our voyage success rates remain the key measure for animal welfare, and at 99.97% is a phenomenal result and reflects the quality of our ships and the attitude and training of our crews. It's fair to say, if even only short as 7 years ago, if you were talking of 99.97% success rates, people would say that is an aspirational target that is unlikely to ever be met. It is now par for the course for the business and part of our core operations. The very high success rates ensures continued demand for our vessels from customers who want to see their cattle walk off the vessel at the destination fit and healthy, especially those pregnated, for both commercial and ethical reasons. Finally, the figure also reflects the quality of the livestock and onboard stockmen that were assembled and recruited by our customers for each of our shipments. As an example, just to pluck one out of the air here, a recent shipment, the MV Ocean Drover, completed its 200th voyage in June, just gone several months ago, and that was a 31-day voyage from Uruguay to China with over 14,000 cattle on board. There was only 7 mortalities, which is just an outstanding record. In addition to the welfare of the animals on board, we're also very focused as a board and company on the ship safety, and we're extremely pleased with our ship safety. Our record is second to none. Safety of our crew has always been a focus of the company, past and present, and to record a 0 figure is particularly pleasing given the high risk environment they are working in. As I commented, the FY22 saw the North Asia shift in the business solidified, consolidated, I suppose is a better word than solidified. After falling over 30% in FY20 to FY21, the total cattle exports of Australia slipped another 32% in FY22. This was largely the result of importers in Vietnam virtually ceasing to import cattle from Australia, and to a lesser extent Indonesia, because as the commentary has been, and we won't go into detail today, we've all heard it, the extraordinarily high Australian cattle prices continue, and which has rendered the importation of large numbers of cattle into the traditional markets of Indonesia and Vietnam uneconomic, and therefore alternatives are being sought by the local consumers there. However, the flip side of that is the British shipments to North Asia have remained stable. Wellard shipped over 105,000 head of cattle to China in FY21, and the number in FY22 was almost the same. The overall market, as we tally it, our market share has remained roughly about the same over the 2 years as well. We don't expect the mix of destination ports will change greatly in 23, and I'll address that greater in the outlook section. Investment in the future. We are acutely aware that ocean ute needs replacing. There are significant advantages of operating modern vessels, which are obviously the enhanced animal welfare outcomes from improved livestock services, the reduced operating and maintenance cost, and the reduced carbon emissions if you are able to substitute bunker fuel with another alternative fuel. There is a lot of work happening in that space, and any investment that we make in the future, we plan to capitalize upon. I'm sure most people in the room would have known over the last 2 years, the skyrocketing price of freight rates, in particular container shipping, which have since moderated, but that has caused a huge spike. The shipping industry in any commodity is super cyclical. When the ship owners make extraordinary profits, they invariably want to build more ships, and that's what we've seen in the shipbuilding. The shipyards across the world are full. The spike in activity is boom time conditions. After visiting a number of shipyards in the past 6 months, it has become very apparent that the number of orders in hand for the new ship builds, particularly the container ship space, has crowded out specialist ship builds such as livestock carriers. There are not a lot of livestock carriers built in the world, the last being our own in 2016, so it is a super specialist build. On top of that, the supply chain issues, predominantly the price of steel, which is a major part of a ship, component of the ship. The escalation of that has flowed through to the new shipbuilding price, such that the overall, even if the shipyard was willing to do the job, the commerciality of doing a new ship is extremely challenging currently. Therefore, we have taken the decision currently to pause the replacement program until the shipbuilding costs normalise. The timing is volatile as markets reprice, and that flows through the shipyard activity. It's difficult to put timelines on this. It could be 6 months, it could be 18 months, it could be anywhere in between. Anyone who can predict the forward market is doing very well. But we obviously then we continue to monitor the situation with both the commissioning and the construction and developing appropriate funding mechanisms very high on our list of priorities. The image you see here has come from our new shipbuild studies and represents an evolution of our thinking. It's not necessarily what we will be building. There are components on there that have been spec'd at the moment, whether they find its way into the final form, depending on price, etc. And I won't go into the details on it, but the whole fuel usage on a ship, alternative fuel, is a massive work in progress with all the major ship operators in the world working in that space to transition from bunker to alternatives. The provisional, it's got a name, the new ship, you can probably see it on there, but it is the provisionally called the Ocean Jillaroo. The other area I'll speak of before we get into the outlook section is the global shipping standards. In July this year, unfortunately, it seems to be a common thing. Every year we report a ship going down somewhere in the livestock space. This year, in July this year, it was the MV Al Badri, one livestock vessel that capsized in Sudan, drowning 15,000 sheep. That vessel was 49 years old, yet it was still able to ply its trade. It was tragic as it was preventable, and adds to a long list of substandard livestock vessels which have sunk to the ultimate detriment of the crews and livestock on board. The fact that there is no international regulations governing the operations of livestock vessels is a travesty. Put simply, this lack of International Maritime Organization, IMO, standards, it has contributed inferior, inadequate vessels continuing to operate, causing a loss of human life, loss of animal life, and considerable suffering for everyone concerned. While much of the blame rests with the vessel owners, operators, it is abundantly clear that lack of specific regulation for this sector has been an enabler of poor design and operation. Wellard, as always, is taking the lead in this space and seeking to change the gap in regulations, including those with the IMO, but they will take time, considerably more time than we had hoped for, and a lot of work for whoever is involved. Nevertheless, we have a responsibility to seek change for the long-term sustainability of the global live export industry and the safety and welfare of the animals and the crew that are on board. Excuse me. It is time for the IMO to act to right these wrongs, particularly when a solution exists in Australia's leading Maritime Order 43, which governs the regulation of livestock vessels and Australian standards for the export of livestock. Our position has been and continues to be that we want to export the AMSA standards across the world rather than see countries such as New Zealand with politically driven closures of the trade. Now moving into the, we've got two slides on outlook, one on the major markets and one what it means for Wellard. This first slide highlights the three major markets for livestock export, which have synchronized together to very low volumes in FY23. If you look at that slide there just for a moment, one is the Australian live cattle exports, the other is the live sheep exports, and the third is the imports of turkey, live imports predominantly from Brazil into the country. If you look at those three slides and line up where FY22 is there and compare it to the previous 10, 20, for the ones that have over 10 years, the Australian ones, but the Turkey one is a bit shorter time frame. But you can see the extent of the downturn in three markets. The upside of this, if there is an upside, is the depth and length of the downturn is likely to finally see some rationalisation in some of the older ships retired from service, which will assist in the rebalancing the market. The non-AMSA approved vessels that ply the trade, there is, as the regulatory forces continue to ratchet upwards, the commerciality of continuing to operate those old ships gets to the point where the scrap value is worth more than the ship themselves. As we saw with the Australian, with the Indonesian livestock traders market, when the crunch came, the traders held on for longer than expected, and we've seen the same with the ship owners holding on longer than expected. But this depth and length of this downturn, with many ships at anchor for many months on end, would lead to ultimately rational commercial decisions being made. As mentioned, just on the particular three graphs there, the Australian live cattle export market, the thing to note there, the FY22 number or the 22 number doesn't actually reflect the last several months since the mid 2022 when the FMD led pause in imports from Indonesia, from Australia occurred. So that annualized volume is even less than that bar shows there currently. So if you look forward to the current year, it's even lower again. We still remain of the view that volumes will improve post the 22-23 northern wet season, and will lead to a recovery in both that market into Indonesia and into Vietnam. The Australian live sheep exports, the trend continues to go downwards. Although the flock has improved, that volume has gone into the local processing sector rather than into the export sector. We do not see a change here. The new government's got a time frame for ending that trade. However, the production systems as they exist, there's other options for Australian farmers than focusing on export business. Although, extraordinarily enough, the Middle East demand is extraordinarily high. However, those guys want simply some guarantee of trade from Australia into the future, which you can see politically we cannot deliver. So the opportunity still exists there, but it seems that Australia will not be able to capitalise upon that. The last market which is actually showing signs of coming back is Turkey. You can see there the volumes when Turkey hit its peak was over 1 million head a year, and that's an extraordinarily high number which soaks up a huge amount of shipping capacity. That dwindled down to virtually nothing for the last 12, 18 months. There's now 160, I think it's 160,000 import quota has been issued by the Turkey government, so that market is heading in the right direction. That benefits us by directing ships away from the Australian market into that overseas market. So what does all this mean for Wellard? We were very transparent in the annual discussion, annual report, in the outlook, and it's turned out as we expected, with some near-term gaps in the forward order book. So Q1 was slow. The MV Ocean Swagman only completed one shipment, and at the same time we had the Ute in the dry dock for 1 out of the 3 operating months. So Q1 was extraordinarily slow, but as expected. We have good bookings and inquiry for the remainder of this calendar year, and I do expect that our vessels will be well utilised in Q2. Currently all 3 are moving, and that inquiry is starting to go into Q3. As mentioned, ex-Australian livestock volumes will continue to be heavily constrained until Q4 at the earliest. Present indications are all but bar one of our charters for the first half of the FY23 will be breeders into North Asia. So that shows the reliance we have on that market and the consistency of the trend that is going forward. Lastly, we're conscious that the New Zealand live export trade, which has been very buoyant, will end next year. Our view on the cessation of the trade is that the Chinese demand for the dairy heifers in particular doesn't end just because New Zealand has decided to exit the market. Instead, that demand will be filled from other markets such as Australia and Uruguay, but the transition is unlikely to be smooth, with an expected pull forward prior to the New Zealand market closure and the supply chains needing to be scaled up to rebalance in the replacement markets. Noting of which Wellard actually benefits from the longer voyage times of markets such as Uruguay that could step into that New Zealand market. So that's the snapshot of the operations, the year that's been, the year that's coming. I'll now hand over, and we'll take questions on that after Paolo's presentation. I'll now hand over to our CFO, Paolo Triglia from Singapore, who will provide a look at our in-depth review of our FY22 results. Paolo?
So thank you, John, and good morning to everyone. So my part of this presentation relates to an highlight of the financial information that Wellard has published in its financial year 2022 annual report. So if we can go to the slide, thank you. So as you could see, I have labeled the financial year 2022 as 1 year of resilience and consolidation. Resilience because it was indeed, as John has already mentioned, another extremely challenging year for our business. Probably it was one of the worst year I can recall myself in Wellard, due to the combination of the factors that John has already described before, like the record high cattle price and reduced availability in Australia, and an extreme rise in bunker price. Even so, our revenue rose about 4%, and we were able to maintain our gross profit margin above 30%. And with the cost of the structure that remains stable and financial cost as low as ever, as a bottom line, we reported our third consecutive year of profitability with a net profit after tax of $9.9 million. And at the same time, it was a year of consolidation, because Wellard can now rely on a strong capital structure with a negative net debt position and $12 million of working capital, and the cash in hand of $15 million at the end of June 2022. So next slide, please. So as I probably said last year, resilience for us means the ability to quickly adapt to external environment disturbance, like the COVID pandemic or a sudden market shutdown like New Zealand last year, or a material reduction in activity like what happened in Australia this year. In financial year 2022, our ability was to continue to grow by serving new customers and improving our market position. So despite exceptionally tough trading condition, our revenue year on year increased by 3.7% to $45 million, with our shipping capacity completely absorbed by external demand. Unfortunately, even if we perform better than most of our competitors, our sales volume fell following the strong reduction in shipping activity on the Wellard key routes from Australia to Indonesia and Vietnam. And at the same time, the sharp and unexpected rise in bunker price offset the extra margin provided by the rate increase. To give you the scale of this bunker price rally, in Singapore, low sulfur fuel oil, which is the main fuel used on our vessel, started financial year 22 at an already high price of about $550 per metric ton and doubled to $1,100 at the end of June 2022. And in Australia, it peaked at an unsustainable $1,400 per metric ton. The result, as John has already said, was that when our customer reached their maximum payment capacity, Wellard had to absorb part of this bunker price increase, pushing down our gross profit margin from the 37% we got in financial year 2021 to 32%. Like other shipping companies, during the year, we also continue to be affected by COVID-related operating issue. And although we had a fully operational fleet throughout the year, we were obliged to perform crew changes in port outside our normal trade routes, incurring in expensive and time-consuming deviation. So we have calculated that direct cost for COVID were about $1 million in financial year 2022, more or less like it was in financial year 2021, without considering the opportunity cost of about 27 days lost due to this crew change deviation. So next slide, please. So nothing really new on the overhead. However, I believe it's still important to mention that after the great cost cutting that we achieved during the previous 5 years, our overhead has leveled off at $4.6 million, which is now in line with the current structure of the group. During financial year 2022, we recorded a small 4.5% increase from the 2021 G&A, which is roughly in line with the average inflation rate in Singapore and Australia. The G&A to gross profit ratio graph on this slide is, in my opinion, the clearest indicator of the company effort and of the result it has achieved in obtaining a manageable group overhead. In fact, instead of considering the overhead as an absolute measure, the graph showed the overhead in relation to the group gross profit. And as you can see, this ratio has dramatically improved by 88% over the past 6 years, from the $38 million overhead in financial year 2017, that was 184% of our gross profit, to the current $4.5 million of the last 2 years, which represent a 30% of our gross profit. This also means that Wellard going on can work at much lower operating leverage and earn larger profit on each increment in contribution. So next slide, please. So after a first marginal profit of $200,000 in financial year 2020 and a more significant profit of $1.9 million in 21, we achieved in financial year 2022 our third consecutive and important net positive result of $9.9 million and an increase in EBITDA of 86% to $21.6 million. And is it true? As John has already said, this result could not be obtained without the $12 million received from the London arbitration. However, I believe that it's important to recognize that this money was not given to Wellard as a gift. This money was what the company invested in the construction of a new vessel in the past, and that hit hard our income statement in financial year 2018 when we had to impair them for more or less the same amount, so more or less was $11 million. Moreover, it was money that this management was able to recover by winning two very challenging and unpredictable arbitration, one against the shipyard and one against the refund guarantor. So additionally, to mitigate the impact of the external negative factor that we already mentioned, during financial year 2022, we also work harder to keep costs down by increasing our operational efficiency, decreasing vessel operating expenses by another $600,000, and maintaining the cost of the structure at a constant level. To complete the cost analysis, as a result of the company deleveraging strategy, our financial cost fell by another 27% to only $800,000, which is also expected to be further reduced next year following the repayment of the lease liabilities on the Drover and the Ute. So next slide, please. So after years of restructuring and consolidation, I think it's probably safe to say now that Wellard has a solid balance sheet. At 30 June 2022, with cash in hand for $15.3 million and loans and borrowings for $7.7 million, we closed the financial year with a negative net debt position of $7.5 million, which actually means net cash in hand for the company, and which represented 200% increase from the $7.3 million negative debt position at the end of financial year 2022. Again, as of 30 June 2022, the proportion of debt used to finance the company asset dropped from the 24.4% in financial year 2021 to just 12.6% in financial year 2022. While the vessel's leverage dropped a further 46.7% on a year-on-year basis, representing now only 13.6% of the book value of the group shipping asset. Very importantly, the group ends up with a working capital of $11.7 million after paying off all the planned maintenance schedule of the vessel and repaying $7.2 million in borrowing and lease repayment. So next slide, please. So this presentation of the financial result ends with a short cash flow analysis. In financial year 2022, cash flow from operating activity generated a net cash of $17.1 million after taking into account the proceeds from the London arbitration. And considering the additional 24% decrease in net interest paid to just $800,000, we got a free cash flow available for the year of $16.3 million. And finally, we ended up with the financial year with cash in hand of $15.3 million as of 30 June, which made also possible for us to feel completely at ease when we repurchased the Ute in August and paid off all the drovers bareboat charter debt in July 2023. And this concludes the financial review. I will now hand back to Mr. Klepek, who will run the formal matters for resolution at this meeting. Thank you very much.
Thanks, Paolo. Okay, now we move into the questions and answers, or questions part of the meeting, and we'll provide the answers. And then we'll move into finally the formal part of the meeting, which will have the 3 resolutions. I'll open the floor to questions and also online take any questions that we have, and we have several questions that we've had prior to the meeting. So if you're a shareholder and want to ask a question verbally, do so here in Fremantle. Otherwise, raise the hand icon on your screen and type in the question that you wish to do so. So shall we address the existing ones? How do we?
We'll start with some of the pre-posed questions, John.
Okay, go for it. Which ones were those first?
So the first one is the recovery of the $12 million is a great result. Was Wellard entitled to interest on top of that? And how much were Wellard's net unrecovered legal costs on the whole matter over the 5 years?
Okay, the 12 million, which is 12 million US, included interest costs. So it's an all-in number. The exact part that is interest and what is the actual payment don't have, but there was an element of interest including in that. The company's P&I Club Insurance sustained the legal cost, and they received their recovery back, and it was only our deductible which we originally paid, which, because we were successful, was also reimbursed from the P&I Club. So net, the cost to us was net zero. When you win and have all the costs awarded against you, you're in the best case scenario you could possibly be in.
There's a couple of questions to do with the Ocean Ute and Swagman with repurchase. The first one is, why have you negotiated bareboat charters for 10 years when the MV Ocean Ute is in your possession and you're due to have the MV Ocean Drover repurchased in 30 June 2023?
Okay, so as of the 19th of August, the Ute is now ours. The legal title has been transferred, so the bareboat charter in regards to the Ute is null and void. The bareboat charter is in place for 10 years on the Ocean Drover, and it's been negotiated and entered into because the bareboat payments are zero because all the payments have been made. So that's purely a security position. The Richira, who is the financier of the vessel, has an obligation to deliver the vessel in 30th of June 2023. And in the event that there's any delays or etc., we wanted to be in a position where we could have surety out for an extended period of time of being able to use the vessel without hindrance from any party. So that's why the 10-year bareboat charter was entered into, because we experienced some delays on the Ute in the past. So this is more about an insurance and for security reasons that we've entered into that.
Thanks, John. The annual report indicates both the Swagman and the Ute will be dry docked in FY23. What is the expected cost of these dry docks?
We don't get into detailed line item of the cost, but if you want to calculate, you can look at the depreciation payments, etc., because the dry dock costs are depreciated over the period of time. Generally, it's several $1 million, depending on the extent of the work that has to happen. So there's no set, hard and fast figure. We take pride in the fact that we maintain the ships extraordinarily well. So we probably spend more on dry docks than most, with the idea being that we keep the ships in the ideal condition to operate throughout the year. So rather than just give an exact number, all I say is ballpark at $7 million. But it varies depending on if it's an intermediate survey, final class survey, etc., and extent of works that is required on the ships.
There's a question about fuel prices, which Paolo largely covered, but there was, on a similar vein, does the company have a facility to pay in advance fuel, this is bunkers, when prices reach an acceptable level?
Yeah, look, bunker prices moving around. It's something we've discussed, talked about. We do have a facility in place that can be used. We haven't used it in the year just gone. The forward pricing, the volatility of it works off the oil price. The volatility of the oil price has been extraordinary, up and down. So it's a high risk scenario taking a hedge out. We haven't done it yet. The price, Paulo said, we've had a doubling of the price, bunker prices. Whether that trend continues down or we go back to where we were, it has an impact on us. Obviously, the difference between paying $1,000 a tonne for bunker and paying 500 is substantial. So, yes, we have a facility in place, but it hasn't been utilised in the previous financial year.
I've got one more question lodged pre-meeting, John, but I'll just remind people online that if they'd like to lodge a question via the chat function or to raise their hand, now's the time to do so. So the last of the pre-lodged question is, what is the final purchase price for the boat whose lease is expiring and how will this be funded? So it's related to your answer before.
Yeah, okay, so the final payments on the Ute and Drover, 2.85 million were made in August when we took delivery of the Ute. So all the payments, there are no more further payments to be made for either of the ships. The Ute is ours, and the Drover has nothing outstanding. It just has to be delivered on the 30th of June next year.
All right, one has just appeared online.
Oh, good.
What is the current status and expectations around the settlement of the Brett Cattle class action?
Michael, do you want to answer that?
Always ask a lawyer a question. It's always an it depends answer. At the moment, it's well into the preliminary process. The class, including us, is being represented well by mentors in Canberra. We have, together with everybody else who is a claimant, assembled a package which estimates our losses, which we are not going to make public at the moment. It's the subject of the court proceedings. That preliminary estimate is being examined by Federal Treasury, which is the body tasked by the government to settle the matter or take it through to litigation if that actually happens. Suffice to say, we're probably potentially only about halfway through. The government is taking quite some time to assess the validity of each of the parties' claims. We've all been asked, as you would expect, to be very careful and to submit verification that underlies our claims so that it's not just a grab bag of money from the feds. So I guess there are some preliminary hearings scheduled in federal court as the matter is managed through the process. There's another one next month, but we wouldn't necessarily, unless the government decides to offer a negotiated settlement, we wouldn't necessarily see that coming to a close, within this calendar year. We would potentially, I think it's fair to say, hope that we could bring it to a close either by negotiation or through the process within calendar 23. But can't talk for the court process and the government in terms of how long and how many extensions they may ask for in that process.
Okay.
That's all the questions that have been received for the general presentation.
So there's no further questions. And to save my voice, I'll ask Michael to take over from here and run through the balance of the meeting.
Sure, thanks, John. There's only 4 items on the agenda today, and the first is a non-voting item. They're just displayed on your screens at the moment. Excuse me. We'll take questions relating to the agenda item if you have them as they arise, and we'll address any other last questions at the conclusion of the meeting. As a procedural note, I note that the notice of annual general meeting has been distributed and is taken as read. And as always, there's a thorough explanatory memorandum section contained in the notice of meeting, which should explain each of the resolutions. Voting by poll. The voting process has been set out in detail in the notice of meeting. We've received voting by proxy, and that's been very positive in respect of all of the resolutions. Some of you have indicated that you'll be voting during the meeting, so we will go through that process as well. Following them are the most important things to help you manage your voting. Shareholders that have been verified to vote during the meeting should have received their polling form by email, as John described at the beginning. For each of your holdings, if you hold holdings in more than one name, you will have received more than one email, and they need to be voted as different packages. Please check your email to make sure you've received those forms. We'll keep voting on all items open throughout rather than require you to vote and submit one by one. Complete polling forms can be submitted at any time prior to the conclusion of the meeting that can't be changed, and the chairman will advise at the end of the meeting when voting is about to close. So if we could go to agenda item 1, which you can now see on your screens, a non-voting item, but an opportunity for anybody if there's any further discussion or questions relating to the receipt of or the content of the annual report.
No, there's no audio.
Nothing online, and there's nothing in the room. So I think we can take that as accepted. Thank you, everyone. Resolution number 1 is to consider the remuneration report. The text is again on the slide. This is a voting item, and in a second we'll put the proxies received in respect of this resolution. You'll see that the proxies, when they're displayed, show strong support for this resolution. There are voting prohibitions that have been applied to this resolution, so you can't vote if you're effectively an interested party within Wellard who's receiving that remuneration. I'll pause and if there's any further discussion or any questions relating to the remuneration report. And you can see now on the screen that there's a 99.49% receipt of proxies in favour of that resolution, for which we thank you, shareholders, for lodging those proxies. No comments on that?
There are no comments.
No? Lovely. All right. So you see the proxies. You can vote for, against, or abstain if you're in the room or if you are online, according to your process. And any open votes will be cast by the chairman in favour of the resolution. And we can work through, I won't wait for you to do that in each place, you will work through that as we go. The second resolution is again a very standard resolution by rotation. Mr. Kandaloo, who John introduced earlier and who participates from China, it's his turn to stand for re-election by rotation. This is a voting item, and we'll display in a second the proxies. In the information memorandum, it describes and gives some background in respect of Kandaloo. He is a director and an executive of Wellard, and you will have read that information prior to the meeting. Again, pausing for any discussion or questions on that resolution, but you can see once again that the vote is in favour, 63.6% in favour. And again, I'll invite you to vote online or vote on your ballot cards in respect of that resolution. No questions?
Michael, there is a question.
There is a question.
Why is Kandaloo listed as non-independent? Is that because he represents Wellard, Wellard's major shareholder on the board?
No, Kanda doesn't represent Wellard, and both the board and the general test for independence in respect of your shareholder relationship depends on whether you control the voting of those shares. Mr. Liu does not control the voting of Felica shares. However, he is the same way as John is, an executive day to day within the business, and that makes him non-independent.
Thanks, Michael. There's no further questions online.
Okay, again, invite you to fill in your cards and your online forms. The last resolution, I'll take a tiny bit more time to explain, but again, when we get to the proxies, you will see that this has been well supported by the proxies as already lodged. We were required to do effectively a full-scale review and audit of our constitution in order to ensure that it was up to date with a couple of the ASX listing rules, which have changed since the company's first constitution was first drafted back in 2015 at the IPO. Those two changes, which effectively are required to keep us in line with ASX compliance, are shown on this screen. They are to replace the rule 2.5 in respect of restricted securities. To untangle that language, it basically relates to escrowed shares. We did have escrowed shares when we listed, we no longer do. So it's really an administrative change. And then there's a replacement of Rule 6, which is provisions relating to the sale of non-marketable parcels. The stock exchange has changed its procedural rules in respect to how a company might deal with the sale of non-marketable parcels of shares. Again, this is basically a must-do, and it just changes the administration. From Wellard's perspective, we don't really have any plans at the moment to deal with non-marketable parcels, so I think I can characterise that as an administrative change as well. If we could pop on, yeah, sorry, that's the next page. The next page are purely administrative changes, not necessarily mandated by ASX. We found that there was a drafting conflict in Rule 8.6. We found that there was in Rule 9.10 a shareholder representative, which is somebody who is the human representative of, for instance, a PTY Ltd shareholding entity, had a timing difference about when they were allowed to lodge their representative form. Not a very exciting change. And a change to align with the Corporations Act about the confirmation of appointment of a director who had been appointed between general meetings or annual general meetings. The effect of this change is if Wellard's board appoints a director tomorrow, our current constitution says that that director needs to be confirmed at our next AGM. The effect of this change is that we're allowed, if we happen to have an extraordinary general meeting before our next annual general meeting, we're also allowed to confirm that director at the next shareholder meeting, EGM. Again, I don't think anybody's found that controversial. And then the very last changes are just to update us with technology, and we're removing the references to the requirement to give notice and communications by fax. We don't have a fax in the office. We've got a workaround which comes through our computer, but we don't want to be tied to the requirement to provide or have provided to us notices by fax, which may fail and isn't really a current technology in the corporate space. So those are all of the changes explained. That's the text of the resolution itself. The ASX has reviewed all of these changes. The amendments have been widely available and are on our website and fully explained. The ASX has endorsed this change and has read and approved the resolution. And if you see the proxies, then you'll see again 99.49% support. So again, I'd invite you to fill in your forms. It's unlikely to change that outcome, but thank you for doing so, and thank you if you've lodged your proxies in supporting that already. I don't think there are any questions we received in any of those.
No questions online.
Thank heavens, that's good. So, just a very last reminder in respect of how you vote if you're online, and in the room, how you vote in person. I'll note that the changes that were made to the Corporations Act during the pandemic now actually require all public company meetings to hold their votes by a poll, which means we'll no longer see the old-fashioned all in favour, raise your hands and say aye method of voting. We will be voting strictly according to your numbers and by forms, and you'll find that in any of the other AGMs you go to as well. Shareholders, you can have some time to complete excuse me, your voting, and the poll will remain open while we hand back to John.
Okay, thank you, Michael. We now, before we close the meeting, just open for a final opportunity for any further questions to be asked.
We have got one online, John.
Okay, good.
In terms of the new vessel, it's great that you've paused this given current pricing. More broadly, how does the board think about capital allocation? For example, how does the board think about returns on investing in a new ship versus buying shares on market given the cash position?
Interesting question. Look, the company believes in the long-term viability of livestock export, predominantly from Australian market. That's our home market, has been and will remain to be. So as a company, we believe is that the Australian volumes will return and there is a viable business going forward. So if you believe in the strategy of the company that there's a viable business going forward, underpinned by the Australian producers of cattle that need an export market for a variety of reasons, supply demand dynamics will change, and that will lead to demand for a modern livestock carrier that is equipped with the alternative fuels and the best in technology that can be applied to both ship safety and technology. So given that, in terms of capital allocation, we see the capital allocation in terms of replacing the fleet, i.e. the ute is our oldest ship. As we said, it's front of mind for the board that we need to determine, we need to have a replacement for the ute, and the ute is not a ship that, you know, we're the ones out there mandating ship age, ship safety, minimum pen area turnovers, purpose-built carriers. Our ships need to fit what we're saying is a requirement for this market going forward for it to be a sustainable business. So in terms of where we sit at the moment, our capital allocation is towards a new ship. We've been open saying we are not going to borrow huge amounts of money and fund this ourselves. As the slide was up there before, we are firmly of the belief that the beneficiaries of livestock export need to contribute to the capital cost of the new ship. If the people who benefit from the new ship are not willing to invest in the new ship, we are not going to co-invest with them. So we will take the lead on it, but we are not going to stress the Wellard balance sheet. The dynamics of the industry is such that it's a spot market in terms of volume and pricing, and the the very high capital costs, that spot market for volume and price is not a good fit with the high capital cost up front. We're not like some of the carriers of commodities or which are underpinned by 10-year contracts with a particular supplier. The industry is fragmented enough that no one is going to underpin it completely. So what we're looking for is a syndicate of like-minded producers, etc., who want to have some skin in the game in terms of the logistics of their business to export overseas, and they will be the core funders of the new ship going forward. Having said that, capital returns to our shareholders are not off the table. We've taken the prudent approach currently with the outcome of the Wellard case that has underpinned the core operations. If you strip the Wellard out, was negative last year. Yeah, and for all the reasons I said in the market is extremely tight not worse than tight, depressed would be a better word to say, in 3 of the major markets. So the company's been able to weather those depressed conditions for a long extended period of time because it has had a cash balance that has enabled that to occur. As changes occur, operations improve, Brett cattle claim actions, whatever, we will actively look at what is the best use of shareholder funds, be that as a buyback. The net asset value of the shares are well above the current market value there. So we understand the commercial viability for the shareholders in terms of some of this activity. However, we're balancing that with 1, the short-term operational outlook, and 2, our need and belief that we need to invest in a new modern livestock carrier into the future. So it's not a simple question that can be answered in, I've gone on a bit there, but there's a lot in play in that, and it's front of mind of the board. The board is not sitting on its hands. We're actively looking at what is the way forward. We've stabilized the company. The company is experiencing extremely tough market conditions. If you can weather the bad conditions as we had, it leaves you in pretty good position for when the better conditions come. And this is a cyclical business, it will come, just a matter of when. So hopefully that, whoever was the author of that question, I don't know, hopefully that has answered your question in as much detail as we can provide.
The response was great, thank you. And that's the last of the questions.
Okay, as that is, thank you for your attendance, for everyone here in Fremantle and everyone online. Look forward to next year's. It will be a hybrid meeting again, probably the same setup as we have now, out of Fremantle for us physically, and then everyone else can join us online. So there being no further questions, we'll announce the results on the AS, because I have to do the voting as well for the other ones. That will be put up on the ASX platform once they've been tabulated later today. And thank you for your attendance, and thank you for all your support of the company over the year just gone, and I look forward to that continuing support for the forthcoming financial year. Thank you.
Thank you.